Okay, good afternoon, everyone. Welcome to today's webinar. My name is Ben Hitchings, and I'm an Associate Director here at Vincent's. Some of my details there. So just the usual disclaimer, guys, for today's presentation. Okay, so on the agenda today, first of all, I'll be giving you just a brief introduction into business reporting, a bit more details then on dashboard reporting, business performance reporting, and then finally three-way cash flow reporting. Okay, so let's discuss quickly what is business reporting. So firstly, so according to Wikipedia, business reporting refers to the regular provision of information to decision makers within an organization to support them in their work. So I think this definition is spot on. It's not simply a set of financial statements, which many of you are used to seeing annually. It is regular. So it's depending on the type of report, you can review these weekly, monthly, quarterly, and is the information. So the information is not just financial, it's financial and non-financial, and is to support decision making, so through the supply of information. Before we get into more detail on the reports, it's important to note that the business reporting starts with the implementation of systems and processes to enable the efficient gathering of information. If adequate systems aren't in place, the quality of the information will be poor and the results will be inaccurate and lack meaning to the relevant users. So before you go ahead and look into any further business performance reporting or any business reporting in general, recommend you at least use a cloud-based software, so like Xero or CountRight Live for Mob or QuickBooks even, and have timely procedures around the data entry and record keeping for your monthly or accounting, so sending, receiving invoices, bank reconciliations, etc. So let's get into it. First one is dashboard reporting. Okay, so dashboard reporting, as the name suggests, is sort of like a car dashboard but for your business. There's generally a series of graphs or statistics and measurements that can help you, that you can refer to and interpret at a quick glance, and it indicates how the business is tracking at any one moment in time, which allows for more informed decision making. So there's a number of benefits to dashboard reporting. I'll go through an example shortly. First of all, it'll give you improved visibility over your business. So it's important to know exactly what's going in your business at all times, especially when you're not there. Dashboard reporting will show you how you're tracking in real time by measuring actual performance against your key performance indicators or KPIs. You'll hear me refer a lot to KPIs, and I'll give you a bit more about that shortly. So common examples of some KPIs you might look at with your dashboard reporting would be your gross profit percentage or dollar, debt levels, debt collections, how quickly you're paying debt and things like that, revenue and profit trends, year-to-date results, month-to-date results, quarter-to-date results, all those types of things. Second benefit there you can see is that you'll save time, so no more Excel is a big benefit, I think, and that a lot of you probably get bogged down in Excel and aware of the errors that can sometimes cause. Dashboard reporting uses software that automatically draws data by synchronizing with your accounting software. So that's going back to that cloud piece I was discussing earlier. Any business performance report you create more than once, or any dashboard report you create more than once, should go onto your dashboard. And once it's there, it's automatically updated. Number three, in theory, your results will improve. One of the best outcomes for dashboard reporting is the ability to change behavior and drive business improvement. When you see real-time results, generally you'll try to start improving them. So the dashboard should clearly illustrate a successful performance, like a thumbs up or a green tick when you're doing well, or a thumbs down or a red cross when you're not. So when you see red, you'll instinctively want to turn it green. So that certainly helps. The fourth benefit there is quick action. So when you look at your dashboard report, you'll get a one-page report summarizing your business performance at that time, which will allow you to compare actual results to targets or previous results in other quarters or periods, which will help gauge your current position. So this puts you in a prime position to act quickly and if there's a problem. So immediate action means small problems are less likely to become big problems. So that's a big benefit there. And the fifth dashboard benefit, as you can see, is clear insights for better decision making. So you're going to reduce your guesswork. So you'll have a better indication of how the business is tracking at that time, and you'll have an increase of information which will help you be better informed and make smarter and more strategic decisions. Okay, so with dashboard reporting, it's important to understand that they're customized. So you can't just have there's no one size fits all for your business. They've got to be KPIs and metrics that are relevant and meaningful to the users. So users can be the business owners or business managers or other key staff within the organization. Report frequency as often as you like. So people tend to use these weekly or daily basis where they can open up the report and have a quick squeeze and see how things are going. So they're designed to be quick glance reference, similar to a dashboard in your car, so you can understand quite easily and quickly as to what's going on. And it's also important to review these. So make sure all your KPIs are still relevant. That shouldn't be and meaningful, it should be and meaningful to the business. So it's important to review these, I would say at least annually, to make sure that they're still that way and you're still getting some meaningful use out of it. So this is sort of a dashboard of what it could look like in any number of businesses. These are, again, just general dashboard type reports. Again, they all should be customized to your business, but this just gives you an idea what it could look like. So if someone using one of these might log into it daily or weekly or monthly, whatever it is, and they can have a quick look at how things are going the year to date, summarize profit and loss, revenue and profit trends, monthly sales versus last year, GP trends, what the cash bank balance is doing isn't moving too much, but and then your monthly debtor days. So these are just some key things that, using it as an example, is what a dashboard report may look like. Business performance reporting. This is the second type of business reporting we're seeing more and more of here at Vincent's. So business performance reporting is a regular business performance reporting using specific KPIs and targets. Can provide business owners and managers with greater insights by allowing them to better understand the performance of the business and present opportunities to assist in reaching your goals. So business performance report, or BPR as we sometimes refer to them as, is different to dashboard reporting. It's generally a more in-depth report of how the business has performed over the last period. So that, again, monthly, quarterly, or annual, as opposed to a real-time snapshot of the business, which is what you get in a dashboard report. Okay, so in business performance reporting, again, I've discussed the systems piece already. So it's important with these things, again, is to have your cloud software access so that the business performance reporting software can talk straight to yours and have timely procedures around all your monthly, month-end record keeping and things like that. So KPIs, I'll just discuss those in a bit more detail now. So key performance indicators, or KPIs. So these are one of the most common measurements of performance in a business. So they measure key components of your business to provide greater clarity on whether you are achieving your desired results. So BPRs can include both financial, so all your things we're discussing earlier in the dashboard, so your GP dollars, percentages, profit trends, revenue trends, cost of sales, all those things, and also non-financial KPIs. So that could include measures relating specifically to employees or customers and quality assurance and things like that. So by having an understanding of your KPIs, you are in a position to make better, more informed decisions and act on potential opportunities or problems within the business. KPIs can be implemented over several areas within a business. So if you've got separate departments within your business, how they can be implemented in those areas. And they can also be user specific. So you can have ones for the business owners, or you can have ones for key staff members, as an example. So a target is different to a KPI because the target's the result or business objective that you're trying to achieve. So it's important that each KPI has its own target so you can measure that. So an old saying is you can't manage what you don't measure. So it's important to make sure you're using targets to measure your business performance. Benchmarking is also an important element, or something else you can integrate within your BPR. So benchmarking can be used in these reports to set targets for your business. So benchmarking is the process of comparing your business performance with other businesses in the same or similar industry. Using benchmarks to set targets within your business performance report is a useful process, as it can illustrate where your business performance is above or below your competitors, and it can show you where your business can improve. So again, see in the slide there where it can illustrate gaps and areas for improvement. And another common theme within all these types of reports too, guys, is the evolving or the ever reviewing of these reports. So again, a BPR is not a set and forget process. It's really important that because your business and industry is always evolving and changing, that your KPIs and targets also need to move with that. So again, I'd recommend you at least review these annually to ensure your KPIs and targets are still relevant and meaningful. And in that same time, you can also add new KPIs or targets that may have become more relevant over the period. Okay, so contents of a business performance report. The content can be wide and varied, as they're usually highly customizable to meet all business or different types of businesses' needs. So they generally form the basis of a monthly or quarterly meetings between the business owners and managers too. So you'll find that these types of things are used in those meetings. As a minimum, they should include the following elements. So an executive summary. So it's a snapshot of the reporting period for the month, quarter, or the year, or whichever period it is that you're reporting on, highlighting the good, the bad, and the ugly. So that's where you'll see a lot of green ticks and red crosses, or thumbs up and thumbs down. A section on your KPIs. So it's just measuring the business performance against their targets and benchmarks, or benchmarks. Then a high-level analysis on the revenue. So you can look at that versus target, or you can have like a customer analysis in there as well. Revenue analysis, in the sense you're looking at your different revenue streams and things like that. Expenses, cost of goods sold, and overhead. So you want to be looking at both of those at a high level. Profitability, gross and net profit results, and then cash flow. Where's the cash going? Which is a big question we get asked quite often. And then at the end, it's also good, even though it's important to include an element of financial snapshot. So you just have a look at how you've tracked and how you've performed versus your budget or your target of your prior period, for example. But it's a summarised version. It's not a full-blown set of accounts. It's summarised, easy to read, understand at a glance, see how the business is going. Okay, so the characteristics of a business performance report. They should be timely. So the results of the business performance report should shape any ongoing actions. So they need to be up to date as possible. So generally I'd aim for, or suggest that you aim for, a 2-week turnaround. That goes back to your systems and processes I've discussed a couple of times already. Having those really tight, so that 2 weeks isn't a big turnaround, and you can get these reports out nice and quick. They should be tailored and specific to your business KPIs and targets. If not, they'll have little meaning or relevance to the users, and they should be simple and easy to interpret. So these are they're not generally number-focused reports. They're high-level analysis of specific areas in your business, which will drive further action based on a result. And I believe I'm going to just quickly show an example. And it might not look too good on your screen, but we've made these available to download, I believe, as part of this presentation. So this is just a quick run through of what a sample, and I just quickly bashed this out yesterday afternoon. So this is a monthly performance report for just an ABC Proprietary Limited. So I'll just get this on one page. Sorry, guys. That doesn't work. Anyway, so we're just got an executive summary. Again, this is where I was discussing earlier, your thumbs up, thumbs down, high level, good, bad, and ugly. So you can review, read, and discuss as a management team. A section on your KPI results. Again, so we've got our results, targets. So these targets can be based on a number of things. They can be a benchmark target, they can be a prior period, and then you've got your trending line here, and you can have your different importance and of the particular KPI. You can set all those up. It's all very highly customizable. So I wouldn't pay too much attention to these numbers. This is just purely an example. Revenue analysis, revenue versus budget, profitability analysis there. I did mention to make sure you include an expense and cost of sales analysis in this report, but I didn't actually bring it in for some reason, sorry. Some more analysis there on your profitability for the business. Cash flows. The cash flow report here just explains where the cash has actually gone and what's been spent on for the period, which is the last month. Some more charts on cash flows, and then this is where the summarised financials come in at the back of the report. So again, this is available for download, guys. I wouldn't pay any attention to the numbers. They're not really, they're just example, illustrative purposes only. Okay, so three-way cash flow reporting, which is another one we're seeing a lot of interest in the last sort of 6 to 12 months with clients needing these or using these a lot more often. So I'll get into a bit more detail. So like the name suggests, a three-way forecast combines 3 financial reports into one. So it's like your profit and loss, or your P&L, balance sheet, and cash flow reports combined into one report. So this gives the reports greater credibility and allows you to predict your future cash flow position and financial health of your business. A realistic event-driven forecast will tell you what you need to hear, not what you want to hear. So with this information, you can start making decisions based on where the business is actually positioned. Okay, so just some of the benefits here, guys, or some of the high-level analysis on a three-way reporting. So it's invaluable as it gives you a first-hand insight into the impact of business decisions in advance through forecasts that detail the future impacts. So these impacts can be positive or negative. So it's really important there to realise not everything's positive in a forecast. You can use both positive and negative forecast to take action. And with a three-way forecast, it allows you to firm or change your decision based on the anticipated income. So that's really important. Not only will it improve the level of financial management and control within your business, depending on your accounting software, this is where I'm going here, the allows comparison. You can compare your actuals to your forecast, and any deviation from the budgeted figures will be flagged, allowing you to intervene and take action before it becomes an issue. As with the other two reports, again, guys, I'm going on again about the evolving. It's not a set and forget process. These should be maintained and updated at least quarterly. So we generally like to use what's called a rolling quarterly forecast. So this is to account for things such as a contract in size or expansion in size. So if you were or unexpected growth, so a contraction in size of your business or unexpected growth, how that's going to impact your cash flows. Unexpected loss or gain of a major customer or customers. Major changes in key economic indicators, so interest rates, inflation, oil prices, exchange rates, all those types of things. And a major competitor, or if a major competitor invades your territory. So any one or a combination of the above can heavily skew your original 12-month forecasted results. So it's really important that you do your regular forecasting, so your business will help show you what you're likely to achieve and how you plan to strategize and counter these events. So how can three-way reporting be used? So bank and financing applications, so applying to your bank or investors even for finance. So these reports generally provide confidence and clarity surrounding your business performance to assist the decision-making process for lenders and or investors. Business modeling, so you can model business ideas or decisions based on different scenarios. You can determine the impact and identify solutions to future problems. Due diligence, which is where we certainly see a bit of activity around this, is people buying a business. You can provide confidence in a potential business purchase, or highlight a shortfall in the proposed vendor figures. And another, unfortunately, area we're seeing a few of these three-way cash flows in is negotiating payment arrangements, especially with suppliers or ATO. So you can provide credible and transparent figures to help you get out of a sticky situation with the ATO and other creditors. Okay, so I do have an example, which is again going to be made available for download. Part of this is just a three-way report. So as I said earlier, it links your profit and loss. So this is the forecast, your projected profit and loss, with a projected balance sheet and your projected cash flow. I can't do a live demonstration, unfortunately, as to how these all interact or how they can be updated, but effectively a change in any one of these figures within the P&L or balance sheet will have an outflow or a flow-on effect to the balance sheet and also the cash flow. So the reason why people rely on this and so much more is because they can see all the reports, the combination of what one change in any of these reports has on the other areas of the business report. So it's really quite a powerful report. Okay, guys, just quickly summarising. As I said, these are the three type of reports we're seeing more and more used these days with some of our clients. And so the benefits for what I can see anyways, it definitely improve the level of financial management and control within your business. Business reporting or regular business reporting especially provides stronger strategic foundations for your business, and the more detailed data and insights which allow you to make the right business decisions and assist you in reaching your goals. And I think that just about concludes, guys, my presentation on the reporting there. This is just a bit of a slide on business advisory where I fit in at Vincent's. So again, just a list of services that we provide here at Vincent's Business Advisory. And as a full service firm, these are the other services we provide as well. So we've got our assurance and risk advisory, business advisory, corporate advisory, financial advisory, forensic services, insolvency and reconstruction, and lending solutions. So feel free to reach out to myself or anyone else here at Vincent's if you have any queries about those types of services. We'll be able to help out.